What's up, everybody? Welcome back to the channel. Happy Friday. Hope everyone's having a good day. Today's video, I'm going to be covering yet another buzzworthy coin that just hit exchanges. It's garnering a lot of attention, both positive and negative. Aptos is the coin. In today's video, I'm going to cut through the clutter and see what is the important stuff you need to know when considering whether to invest. And just a reminder that especially with coins that just hit exchanges like Aptos or like Zen Crypto yesterday, you want to do a special due diligence, and you most likely want to wait a certain period of time before investing. That's because a lot of coins can become unlocked early. That can put a little bit of sell pressure on the coin, or like in yesterday's video with Zen Crypto, there's an extreme inflationary model, and so you want to wait until the hoopla over the new minting feature dies down slightly. And that is my do your own research, due diligence spiel of the day. Let's dive in here. Don't forget to hit the like, subscribe button, drop a comment down below. Tell me what you think about this coin. Let me know if you have any other coins you want me to review. And without further ado, let's begin. Aptos. Here's the logo. Here's the price chart. And again, it just hit exchanges this week on Tuesday, October 18th. Obviously, a little bit of choppiness in the first few days. That's expected. Prices seem to have leveled off since then. But as mentioned with coins that have just hit exchanges, you want to give it a lot more time than a few days. You want to give it a few weeks or even a few months of level price action to make sure that any initial price selling dumping has already occurred before you consider investing. And then part of the buzz, the exchange, when it got listed on exchanges, it got listed on every single big exchange. It got listed on the big three: Binance, FTX, KuCoin, also Coinbase. That was one of the big three. Huobi, Gates, Bitfinex. So every single exchange already listed this coin. But it also came with some concerns, or some FUD, we shall say. You might have seen some of these headlines this week. Aptos blockchain launches to concern over tokenomics. That's because the tokenomics wasn't really made available upon launch, or at least I couldn't find it. Other people couldn't find it as well. There's another headline: Aptos ruffles feathers as it enters crowded layer 1 race. It's true, it is a crowded blockchain layer 1 race. In defense of Aptos, crypto's punchline this week. So a lot of sort of FUD-induced kind of negative headlines. But let's cut through the clutter, see what FUD is real, what isn't, and is this a coin that you should keep on your radar? So what is Aptos? Well, they brand themselves as committed to developing products and applications on the Aptos blockchain that redefine the Web3 user experience. So they are a blockchain, basically, which means they are focused on the apps that are going to be building underneath them. They're dubbed a Solana killer. That is because a lot of the employees on Aptos came from Solana, and then a lot of the exchanges, the venture capital firms which have invested in Aptos, were heavily invested in Solana as well. So a lot of people might be thinking that since Solana, the price is down so much over the last year, they've suffered through so many different hacks, maybe some of those VCs are kind of shifting their money and their attention into Aptos to replace Solana. That's just speculation within the industry. So, and they also have Facebook roots. It began with Meta, the company formerly known as Facebook. So what happened was DM, that was Facebook's blockchain initiative, which they abandoned about 6, 7, 8, 9 months ago, last January. And then the employees who are now starting Aptos, these are the employees who ran DM, Facebook's blockchain initiative. Specific employees are Mo Sheik, he's the CEO and co-founder of Aptos, and Avery Cheng, he's the CTO and other co-founder of Aptos, both former Facebook employees. And additionally, there's a battle-hardened group of PhDs, researchers, engineers, designers, and strategists who were the original creators of DM, and now they are also on the Aptos team. So a lot of big-name experience in this coin. So, as mentioned, Aptos Layer 1 blockchain developed by Aptos Labs. So just, kind of a typical new blockchain that is faster and cheaper than all the other blockchains. We've seen this before. That isn't really a negative, but this is pretty much how every sort of layer 1 brands themselves. Although Aptos differs from other blockchains because a single failed transaction will not hold up the entire chain. Instead, all transactions are processed simultaneously and validated afterwards. Now, the Aptos mainnet has launched. It launched this week, so that's kind of cool. It launched in conjunction with their launch on exchanges, with the token being tradable. You don't really see this too much. You think you would. It sort of makes sense, but so often you see a project being listed on exchanges way before the mainnet launches. You don't know when the mainnet's going to launch. No, obviously having, the top designers and developers in the tech industry, they made their deadlines and then some, so they've really gotten a lot done since then. So technically speaking, Aptos is developed in Rust. That is the programming language that was used by Facebook and their DM, their blockchain initiative, and now Aptos does. So in terms of the speediness, they claim to be able to process 130,000 transactions per second. Sounds like a lot, but they have had some trouble keeping up with that in the first week of launch. They were reported to be processing only around 3 to 4 transactions per second, far less than the 130,000 promised transactions per second, and even less than Bitcoin's notoriously slow 7 transactions per second. The team has said that they do plan on speeding that up, and that's just a little temporary hiccup, which, there's always hiccups upon a mainnet launch. It's looking at funding. So this is where the project really got a lot of its buzz and then scrutiny at the same time. So look at the huge number: strategic round 200 million, Series A 150 million, then an undisclosed amount on top of all that by Binance Labs. So it's already received at least 350 million in funding. And I mean, look at this, is literally the who's who of VCs in crypto. Every single one. So Binance Labs, that's Binance's VC arm. FTX Ventures, that's FTX's VC arm. And then Coinbase Ventures, that's Coinbase's VC arm. So obviously this is why this project is already listed on those exchanges, because their VC firms invested in them. Additionally, Andreessen Horowitz right there, that is the single biggest VC firm in Silicon Valley and the biggest crypto VC firm in general. Jump Crypto, it's a huge one in Chicago, tons of funds there. Circle, that's a big Boston fund right there, a lot of money there. All these other ones, pretty big. What else? Hashed Fund, that's an Asian-based fund. They were notoriously known for losing, I believe it was $3.5 billion when Terra went down, but apparently they're still up and running. That did not put them under. Block Terra Capital, it's a big Miami, formerly Chicago-based VC fund. So a lot of American big funds and pretty much just every big fund in crypto in general, which obviously stems from the team coming, obviously a very credentialed team coming from Facebook. That's what happens. Move on. So the valuation after the Series A, pushed it to $2 billion before the project had even hit exchanges. And then that was before Binance jumped in. Then when Binance jumped in, the valuation is even more than $2 billion. So this project's already looking at a $2.5, $3 billion valuation, which again is a little different than the total market cap and coin market cap, but still, this goes to show this project very huge in its early stages. Now, the tokenomics is what kind of ruffled people's feathers. As I said, this headline here: Aptos blockchain launches to concern over tokenomics, because always the tokenomics, the vesting schedule, meaning what percentage of the tokens go to the team and the other groups involved, and what are the vesting schedules, when do tokens unlock, that always is available at launch. Always. This, I guess it wasn't made available until a day or two ago, or at least I couldn't find it and other people couldn't find it, so that seemed a little suspicious. But I mean, I don't really see anything unusual in this here. So the percentage is 51% of the community. That's a lot. That's pretty good. So people can't be complaining about that. This is developers and the team, 19%. Not bad. Foundation, that's like the reserve that's generally used for sort of future acquisitions or, DApp development. That's 16.5%. Sounds normal. Investors, a lot of people were bitching that investors were getting a too high allocation. This honestly is a little bit lower than normal. I want to say 13.5% to all these big name investors right here. That doesn't sound too high. But a lot of times investors get a total between all the pre-sales. It could be 20, 25, 30%. 13% is a little lower than normal. So if people want to complain, I guess it would be a little bit more on the developer and the team side getting a high amount, but it's not really that much higher than normal. So I don't really see anything suspicious here. Now you look at the vesting schedules, you want to make sure that just a bunch of coins don't get unlocked early. And again, I don't really see anything suspicious here. So developers and team, it's a 4-year lockup, and then nothing becomes unlocked for the first 13 months. That's good. That's pretty standard. It's usually about a 5-year lockup, nothing unlocked in the first year. Investors, same thing, 4-year lockup, nothing unlocked in the first year, so that's good. So none of these huge investor allocations are becoming unlocked for the first year, so that's good. There's going to be very little sell pressure from that end. Foundation, that's pretty standard, unlocks over 10 years with a very small amount being unlocked earlier this week. And then community unlocks over 10 years. That's pretty standard with about 20% of that being unlocked earlier this week. So it looks like, by my calculations, it's always a little bit off, but it looks like maybe 10 to 12% have become unlocked at the token generating event. So that's not bad. It's normal. Usually expect, 5 to 10, 15% of tokens being in the circulating supply at launch. So I don't really see anything unusual by the tokenomics. Let's look at the team. So it's currently 60 employees in the team. That's huge for a new crypto project. Most of them, I mean, the medium market caps projects usually start with 5, 10, 15 employees. So 60, that's big. Not really a surprise. Based in Palo Alto, that's one of the big towns where Silicon Valley is. All the employees, pretty much Silicon Valley, New York, San Francisco. This is just a very it's not just a American project. It's a very Silicon Valley project. And any kind of project is very VC heavy. People are always going to be a little suspicious. Are they taking too much of the money? I'm not really seeing that myself. Looking at the Tokenomics. So market cap of about 930 million. That can always change. Right now, they're 55 in terms of total market cap. This, if anything, this might go up a little bit. Sometimes recalculations happen. Otherwise, this, so, sort of near the large market. Usually, a lot of people consider the large market caps top 30 to top 50 coins. This is a big market cap coin. They don't have the circulating supply listed, but my calculations show it to be around 10-12%. Let's look at staking. So 7% annually. That's the max. So with the big coins like this, the big blockchains, it's usually, from what I see, about 4.5 to 7%. So that's good. They're within the norms. It's not like suspiciously too high, but within the normal range, they are on the high end. So that is good. But then again, if you're looking for a sort of a more high risk 20% annual yield, that's not this kind of project. That's a more, sort of lower market cap, high risk projects. This isn't like that. This is just standard 7% annual yields. Ecosystem, so it's already pretty big here. Looks like they're big on NFTs, but tons of, obviously when I'm looking at a new coins ecosystem, I don't really have time to go over all these coins, but I look at the most recent development announcements. So obviously since the mainnet just launched, they've been announcing and launching a lot of apps this week as well. So let's go through some of the more recent ones. Layer Zero Labs just announced they are cross-chain bridges, omni-chain interoperability. Mover XYC just launched this week. They are, They are first bridge between EVM networks and Aptos. That's again cross-chain bridges. So they want to be very sort of compatible with other big blockchains, it looks like. Partner with Bundle Network to provide data storage for gaming and NFT projects. It's kind of cool. Rise Wallet, that's the native wallet for the Aptos token. So if you're thinking of buying, definitely download the Rise Wallet. That obviously just launched. Soulful 3, that's next gen smart trading NFT markets. This will be one of their big NFT market trading places, Soulful 3. And then Nutrios, they're being kind of secretive about this one here. We're building Nutrios pretty much exclusively in stealth mode. We're getting very close to our big reveal. The only clue they've given is right here. Nutrios is about to change everything regarding how food is discovered and ordered and how chefs can monetize their creations. So this one, Nutrios, is nothing like all the other apps. Something with food cooking, food delivering, food ordering, all that stuff. Kind of cool. That's it there. Obviously, any new project I'm always excited about here. Definitely, as I said, give it a little bit more time before the prices stabilize to make sure there's no initial dumping. But the good news is that it's a full 13 months before the team allocations, the developer allocations, and the huge investor allocations become unlocked. So that's very little downward selling pressure from those big entities in the first year, but that doesn't mean prices aren't going to go down. There are community allocations that have also been unlocked. They're going to continually being unlocked in the first year. So obviously do your own due diligence with all these coins, especially the ones that have just hit exchanges. But this is one I don't really see where too much of the FUD is coming from. It's a good project. I like it. I'm going to keep following along. So for today, I'll be back with a new episode on Monday. Don't forget to drop a comment down below. Let me know what you think about this project. Hit the like and subscribe button. I will see you on Monday. Have a good weekend. Later.